The rand firmed in early trade after the US dollar fell on expectations that the largest US bank failure since the 2008 financial crisis would prompt the US Federal Reserve to slow the pace of its interest rate hikes. Greg Katzenellenbogen, director or senior portfolio manager at Sanlam Private Wealth, joins us now to take a look at the latest market move. Thank you very much, Craig, for your time. So it looks like the rand has won back lost gains after last week's dive.
Well, there's expectations now that the Federal Reserve only last week was saying they'd have to raise rates much higher. It looks like that they might actually have to pause them if this banking crisis gets out of hand. You're already this morning, you're seeing another American regional bank, First Republic, its share prices down 60% in the pre-market. So that's unlikely to, it could be another bank where the shareholders and the bondholders get wiped out, but the depositors will be protected. So the rand is benefiting from the weaker dollar this morning, but we've seen in Italy this morning UniCredit that has been suspended on the Italian stock exchange. So we're not quite sure yet how this banking crisis is going to play out, but it looks like that depositors in all these American banks will be made whole, and that should not have much effect on the systemic risk. But of course, shareholders and bondholders in those banks, they are most at risk.
Let's take a look at news from MTN. They say power outages cost them 695 million rand. Talk to us about their performance and domestic issues that they flagged.
Well, performance was good. They did well, and particularly data revenue, that was up about 30%. But the most important thing, I think, about the result was the comments by the chairman, who didn't mince his words by saying that South Africa risks becoming a failed state, and if they don't tackle both corruption and the electricity crisis and just the general malaise in the country. But the results were good. South Africa, of course, some problems, but you can see how many more people are in their client base are using the internet. Data sales up very strongly. They're also going to look to sell off their fiber section maybe next year in 2024, which is a trend really from telecoms companies around the world to sell off what they, some of their infrastructure and just being providers of the service.
Greg, do allow me to digress and pick up on the point you make in terms of the comments of South Africa running the risk of becoming a failed state. If you read between the lines, what does that tell us in terms of the message that is coming out from business?
Well, I think the message is that business realizes that, as you mentioned earlier, close on 700 million just to mitigate the effects of load shedding. Multiply that by all the major businesses in South Africa, and you're talking some serious money. So I think the underlying message is that, urgent action is required, and it's required now. And the time for talking is over. It's time for action.
Let's take a look at Absa. They reported headline earnings increasing by 14%, while equity improved to 15.6%. Help us make sense of that performance.
Well, Absa's results were very good, on revenue approaching close on 100 billion. So they've done very well. But the reason, look, all banking shares are down today in sympathy with what's happening around the world. But Absa's dividend was a little bit disappointing. The market expected a little more, though it was up quite nicely. But the other reason is that, their impairments increased by over 60%, and that's quite a blow. And that was also driven by they had to impair 2.7 billion rand on their Ghanaian operations because the value of their Ghanaian debts, they had to take a haircut. But otherwise, the bank really in their other divisions are doing quite well. So it's a pity about those impairments, and hopefully they won't be repeated. But the bank, like all other banks, has warned that, rising interest rates and inflation do put their customer base under pressure. So that's something to watch out going forward.
Yeah. How do we understand that, especially in the context of what you just explained in terms of business wanting action for things to turn around in South Africa, to these reports of some businesses doing really well in spite of the circumstances?
Yeah, well, look, South Africans are generally a resilient people, so the businesses have done, but eventually you can, in tough economic times, you still businesses can outperform until they don't outperform, until things really catch up to them. But the worry is now that you get a total collapse of the grid, and then it's all bets off. But the banks had excellent results, but I suppose they're basically telling investors that there's significant challenges ahead, and they might not repeat those in the next year.
Okay, so Naspers has opted to shut down its 1.4 billion rand technology investment fund, which is Foundry. What was the rationale behind that decision, and what does it mean for tech companies affiliated with it?
Well, look, for the investments that they have made, they will continue to look after those investments. They're not withdrawing that. It's just that they're not going to. So the Naspers Foundry Fund is not going to make any further investments in South African tech startups. That doesn't mean that there won't be any investment. They say that their process company, affiliate that's registered in Amsterdam, all investments, tech investments, will be made through that in the future. So while it is disappointing, I think they wanted to just put everything under the one banner, not sort of repeat what the process was doing with their startup investments. But times are tough now for venture capitalists and startups. You see what's happening, particularly in the United States, and getting funding will be more challenging. And I think, in the past you could fund these businesses, and, if they prove to be a success, you could put a significant multiple on them when they ultimately listed on the exchange. But I think those days of these significant multiples are probably gone, certainly in this current economic and high interest rate climate.
Greg, thank you very much for your time. Senior Portfolio Manager at Sanlam Private Wealth, Greg Katzenellenbogen.